Hello, everyone, and good morning from where I am, of course, to all over the world, to the XM community, and to everybody who is watching us through social media. This is the Traders Talk. We have this once every month. By the way, XM Live is a service that is streaming on 3 different channels, 8 hours every single day, live trading from more than 10 experts, 12 to 15 experts, every day talking about the markets. And our very special guest for today is the superstar of XM Live, Peter McGuire. How are you doing?
Oh, well, very well. I'm talking to the superstar, Gil. You're the superstar.
No,
I'm here to greetings from Sydney.
It's fantastic to have you. And I'm really, really excited to know you deeper and understand where you come from, your views of the markets. I want to study how the economy is built in Australia. I'm not very aware of it, even though I trade Australian dollar for more than a decade. Yeah. And so I'm really, really excited. Now, before we really dig into the theme, I would like to welcome the viewers from all over the world. You can use all the chat functions. So if you are watching us from Facebook, from YouTube, you are asking questions over chat, and we will try to answer all the questions that you have. But I recommend you come to XM Live, to the website of XM, go into XM Live, it's totally free, and there you will not only have the traders chat, but many, many other sessions as well, and you can learn trading every single day. So with no further ado, let's start. Peter McGuire, you are really a star. I mean, you made over 3,000 interviews. I saw your videos and your interviews on Bloomberg, CNBC, all over the world. And you are the CEO of XM Australia. How does one person become a CEO? Where are you coming from? What are your studies? How did you become an expert? And how did you gain the knowledge that you have today? Maybe start with your, tell us a little bit about yourself, your studies, your jobs in the past. Yeah, who are you?
Okay, well, it's lovely to join you, Gil, and I've been associated with the financial markets for a number of decades. I won't tell you how old I am, but I vividly recall going to the NYMEX in '87 at the World in the World Trade Centers in New York City, and I remember that distinctly. So, and I was trading in the market, so that gives you some sort of indication. That's not that long ago, I suppose. And how do you have to become learned. You have to have a love affair with the markets, I think, to have an appreciation of them. It's not a job. As they say, if you do something that you enjoy, it's not going to work. You're very fortunate. And some people have that. I hope that everyone has that opportunity in their life to do something that they really enjoy. And I find the market very fascinating. I enjoy studying them. I look at the whole factor that wraps itself around. I really enjoy energy markets and gold, but primarily oil. I find it fascinating. So I've got a long love affair with it, Gil, and I've been to some very good universities to give me knowledge. So that's another part of the whole journey, I think.
I understand. I totally agree with you. I think you have to be hooked up with the markets in order to survive those markets, first of all, but also to understand them. And the really exciting journey in this environment is that you never stop learning, right? That's but maybe, absolutely. I mean, now when you're telling me that you've been at the NYMEX in the 80s, tell us maybe a little bit how markets changed from then to today. I mean, then everything was still manual. People were screaming probably on the floor. And
yes.
Tell us a little bit how this changed.
Well, in those days, I mean, you had a machine which was a Reuters machine, and I don't even know the lag or the time issue. I mean, that just wasn't a consideration because you got the feed from the market, but I don't know whether it was 3 seconds behind or 2 seconds behind because we're in Australia and the market's in New York City. So I don't know whether I have no idea whether it was 5 seconds, but that was the way you got the information as far as market price. But I remember, so if I look at that and I was and trading futures, as you know, the markets can move so quickly that you're looking at a price and it says 60. But all of a sudden, when you're on the phone to the broker and the broker's on a phone to the broker on the floor, that's how you had to do it. So they've got two phones and you're saying, oh, well, I'll buy at 60. Hang on, man, the market's at 65. And you go, well, hang on, it's on the screen, it's showing 60. Oh, no, that was, 20 seconds ago sort of thing. You know how markets move so quickly and violently. So that's that's a real example of how the futures market and certainly when you're looking at currencies can change so quickly. I mean, you look at the pips, or the pips, I should say, that whole framework of trading now is electronic, and we've got state of the art connectivity that allows traders to be really living and breathing the markets.
This is really amazing, and I assume also, I mean, in the 80s, even in the 90s, no retail trader had access to the currency markets, for example. That was solely for professional traders, and today everybody can access it, right? How did this change over time? Did the market behavior change by the fact that retail traders came in?
Yes, absolutely. I mean, in the old days, you had futures market. So if you wanted to trade Deutschmark versus US dollar, it was 125,000 Deutschmark. Yen was so many, I think it might have been 1 million yen. I can't recall the contract size. Pound versus dollar. So that's how many, that's the value of it. And then you would buy so many contracts of futures to go long or to short, or naturally, if you're looking at options, well, that's a different scenario again, puts and calls and strategies. But when we look at the dynamic nature as far as margin FX and what that's created is such an attraction for traders globally, because the markets are, they're everyone anywhere in the world can have an opinion.
Yes.
And that's the beauty of these markets, that, Goldman Sachs might be saying, oh, well, we're bullish US dollar, for example, and a trader in Sao Paulo, Brazil, who is an architect, and it's a lady, and she wants to trade, and she believes, no, I'm looking at the technicals. I think that the dollar's going to get sold off. And she goes the other way and does extremely well. So it's just behavioral. Everyone's got their own interpretation of where they see markets moving, and that's the analysis sector that really drives participation in these markets.
Fantastic. Peter, I would like to go back and start where you started with your study. How did you become an expert? Where did you study? Where did you work in the past? How did you become a CEO of XM Australia?
Oh, well, I'll go back a couple of decades, but if I look at an educational standpoint, I'll just do it from this century forward. I did an Executive Master of Business Administration, or an MBA, at the University of Technology in Sydney. And then, that was in 03 and 04. And then I went to the Wharton School at the University of Pennsylvania, which is Ivy League, and did a post-MBA. Really, in some ways, it's their flagship program. It's in executive education. And to give you an idea, it was a 5-week program. I think in US dollars today, it's about 70,000. I'd have to check. About 70,000 US for 5 weeks. They still run the program, and Harvard run one, Wharton run one. There's a whole. I'll just have a look. because I'm curious to see what they charge for it. So I did that program, which was just an incredible opportunity to get a real appreciation as far as, there it is now. It's 69,000. Oh, so if you go this year in September 29 to November 1, it's $72,500 US for just on probably 5 weeks. So it's regarded, it's Ivy League. It's one of the best business schools, if not the best in the world. So if you want to get knowledge, Gil, you've got to immerse yourself where knowledge is, where it's exchanged.
Mm-hmm.
And I had the good fortune of going there. I also went to the INSEAD Business School up in Singapore, and I went to the University of New South Wales in Sydney, and I did risk management there as well, postgraduate work. So I like that sort of stuff. I'm not a quant in any fashion or form, but I like the frameworks, and I'm interested in marketing, in business development. I'm certainly fascinated by the markets. And I like finance and strategy and innovation, and those actionable strategies really become a part of building brand. And that was probably how my role has really blossomed at XM. I've been there, I don't know, 4. Wow. So I'm just finishing now my 11th year at XM. I'll be starting my 12th year next month. So it's not a short period of time. And I hope to be here for another 12. Let's hopefully in good health and happiness. We're both here in another 12 years. And we're doing everything right, which in turn creates the opportunity to assist traders all over the world in building our brand and our recognition, I think.
So I just start to understand that we started probably more or less at the same time at XM. I started 2013 for German markets. I did and I do webinars for the German markets there. So
there you are.
So
well,
it's very interesting.
That's a big, yes, and we're on different parts of the world, and we're in not only different parts of the world, different languages, and in turn, different locations.
Now, Peter, I want to go now and talk about Australia, because I want to really to learn, and I believe many of our viewers are eager to learn about Australia, because the Australian dollar is always fascinating to trade. It's called a commodity currency. In the past, I remember very good that interest rates were 2-3% above the US dollar interest rate, and it changed. Today, we are in an environment where in the US interest rates are higher than in Australia.
Yeah.
So I would like to learn a little bit about Australian dollar and Australia's economy in general. Maybe you can, this is a huge topic. We could talk probably for a month about it, but if you can give a little bit an overview, what is unique about the Australian economy, and and about the currency.
All right. Well, first off, they floated the currency in 1984. So that's 40 years ago. Mm-hmm. And that allowed the currency to be exchange traded, in the sense it wasn't fixed, and it was a floating currency. So there's 40 years of it being able to be traded against trading partners, trading pairs of currency. It's as you highlighted, it's a commodity-based currency. Mm-hmm. When we say commodity-based, so I just want to give people a true indication of its size and the geographical size. It faces 2 oceans, the largest ocean in the world being the Pacific, and the Pacific is double the size of the next ocean. So that's the mass of the Pacific Ocean. Mm-hmm. It's the biggest by 100% compared to the second place. That's the eastern side. On the western side is the Indian Ocean, and actually we've got a great ocean underneath it, the Great Southern Ocean, under the south of Australia. So when you're looking at that, we're 4,000 kilometres approximately from Sydney to Perth. Mm-hmm. Perth is the most isolated capital city in the world. and it truly is quite an incredible location. If you look at a map and the size of Western Australia, I think it's the biggest state in the world, and you've only got the best part of probably, I don't know, maybe 4 million people there. You might not have 4, you might only have 3 million people there. So it's not a big population for the mass of size.
Mm-hmm.
And you've got fishing, you've got iron ore, you've got diamonds, uranium, you've got all forms of base metals, nickel, tin, lead, and the mining and wonderful wines and wonderful diamonds and pearls, and it truly is an incredible state, and it's an incredible nation when you're looking at it, because there's no one here. There's only 26 million people.
Yes.
Sorry, go on.
Yes, so it's kind of isolated, but still very well connected, right? You are connected to the Asian world mostly, probably, because this is your geographical closeness, but the language is very strongly also connected, and history to England and to the United States. So
Yeah, exactly right. And we sit underneath Indonesia, Gil. So it's a 7-hour flight from Sydney to Singapore. It's about 10 hours direct to Tokyo, and very little jet lag. I think it's only about an hour. So that's why a lot of Australians go up there to ski, because it's incredible skiing in northern and in anywhere in Japan. But the beauty of it is you're not getting jet lag, versus if you went to Germany and you've got that 10-hour time difference and you're tired, and you travel, and I certainly have spent a fair bit of travel, and, the jet lag factor does play a part, especially when you're doing a gross motor skill exercise like skiing. You've got to be very, very engaged. You don't want to be, half drunk in the sense of, sleep deprivation. Yes. And that's what it makes you feel like to ski down mountains when you've got people going past you at 60 k's an hour on skis. You've got to be really game on from an injury perspective. So there's that. And so we sit in the basket of Asia. We're also a 14-hour flight from Sydney direct to Dubai. Perth is about an 11-hour flight, 10-hour flight to Dubai.
Mm-hmm.
And Bali, Indonesia, is a favourite haunt of Australians from a surfing perspective, because we're surrounded by ocean, and surfing on I think we've got an ad break.
Yeah, you can finish, and then we make a small break.
All right. And so what happens is Australians like to travel, and we've been wonderful travellers. So Bali has been a very important part of our whole culture, to go there and surf, and that laid-back attitude of Indonesia. So, yeah, that's a little bit about who we are, what we are. We're great wines, fantastic country, and if you haven't been here, you're crazy if you don't attend.
I have to. I never been, and I have to. I know. Peter, I immediately will continue with questioning you. I'm interested into the commodity world. I mean,
sure.
My love, by the way, always was with currencies and with commodities. I'm not so much an equity guy, and commodities are an incredibly important part of Australians' economy. Can you a little bit explain what are the main commodities that Australia has, and with who Australia is trading those commodities?
Okay, well, let's talk first off, I think, iron ore, and naturally it's helped build China, and its freight costs are far cheaper than what Vales are from Brazil.
Mm-hmm.
So we've got a very, very high quality of iron ore that is mined in Australia, and we export that, and it's a higher quality than what India produces, and we've been able to export that, and from a freight perspective, it's been beneficial to the whole fabric of the deal to China. And as you can imagine, what China has produced from a steel perspective over the last 30 years has been an insatiable appetite to steal the world, and that's STEEL. So you've got, bridges, you've got buildings, you've got everything that needs to be constructed needs steel.
Mm-hmm.
And what goes into the input naturally is iron ore. So there's the first part. So we've got a very strong demand from China and many other countries that have asked for other parts of, like the likes of coal for energy. That's been strong from Japan and from many other nations. The other part, of course, we've got incredible seafood and agriculture. We're a agricultural basket that's been able to export some of the best fruits and vegetables in the world. Seafood, our seafood was world renowned, from lobster to crab to mud crab to magnificent fishes, everything you could ever imagine, prawns. I think some of the best produce in the world, because crystal clear waters, and that's been a true attraction. Then you're looking at cattle and beef, incredible beef. So, and then some of the greatest diamonds ever produced has come out of Australia. Uranium for nuclear power plants, of course. Then you're looking at pearls up at Broome, the pearl farmers and those beautiful pearls that some of the women wear that are just extraordinary, beautiful pieces and objects of art, like a diamond. So you've got, a whole fabric of commodities, and including milk and dairy and everything associated from the food side to all the way through to base metals, and then, energy production like coal. So I had the good fortune. I was contacted by Bloomberg in Ticks, and I, pardon me, out of Hong Kong, and they asked me to come up and have a talk to them on TV. And I was involved in a derivative company, and they wanted me to meet with a particular fellow as well, and come up and just do a live talk from Bloomberg Studios in Hong Kong. Now, this is 18 years ago. So I said, yes, okay, sure. So I flew up, and the gentleman that wanted to talk to me externally to the Bloomberg, but asked to meet me, was none other than Jim Rogers, who was George Soros's partner in the Quantum Fund and wrote a magnificent book called Hot Commodities, and was a traveler, a legend. I mean, a true legend. The Quantum Fund was the most successful hedge fund in history. And Jim met with me, and I visited him twice. Once at the twice I saw him. I've seen him around the world since, but twice at the Four Seasons Place, which is next door to the Four Seasons Hotel in Hong Kong, and there were 3 stationary push bikes. So he would be riding one for 70 to 90 minutes. In the middle one on the seat were all today's newspapers, and they're like that thick. So he would just look at the papers, and then he'd throw them on the ground because he's read them all. So that's how so he's got all those 10 newspapers, or might have been 20, from all over the world. And then the third bike is for a guest, and the guest gets 10 to 15 minutes. Now, on the push bike, as you know, are those life cycle push bikes, and they've got a screen on them. And he's watching Bloomberg Live, right? And you've got the anchor. So he's in Hong Kong, and the Hong Kong is produced in Hong Kong with the Asian Bloomberg, and he's watching guests come on and watching the markets, and then he's talking to me. So he said, "Can you ride?" And I'm pretty fit, and I was doing a lot of cycling then. And he said, "Can you ride a bike?" And I said, "Oh yeah, sure." So I rode the bike, and he said, "Oh, some people only last 10 minutes." I stayed with him for 45 because he had to go and do some other stuff training wise. And so I did some weight workout, and then I came back. And so Jim was a great, I think, mentor to me, because I truly embraced the commodity complex, and I became in some ways a subject matter expert, and that's given me the footprint to discuss global markets with a degree of authority on the likes, in an hour's time we're with CNBC Arabia, we're with Bloomberg on Sunday, last Sunday, we talk with global networks all over the world, and that's what I talk about. So I do this daily, and that's just the way of the world, Gil.
So Australia is very commodity rich, but I would also call it commodity dependent, right? Because that's what it produces mostly. The problem with, if you are so strongly commodity dependent or not dependent, commodity influenced, you are very strongly influenced by the price, because not Australia makes the price. It's the demand and the supply who makes the price. And sometimes price is down and sometimes the price is up. How does this influence the economy of Australia?
Well, it greatly impacts it remember, you can have strikes, you can have unions, you can have weather outages, you can have, if it's fires, natural disasters, wind, hurricanes, all those factors can greatly impact agricultural commodities or frosts.
Mm-hmm.
So, you want to grow you want to plant in the 1st of June, but if you're running into winter and it's a very wet season, you might not get your crop in till the start of July. So it can't grow and mature because you want it out of the ground in November, but it's a month late. So you might be heading into a very hot summer, and in turn the soil moisture gets, has an issue, which in turn impacts the yield of the crop. It's not so much the case if you're mining gold out of the ground, because the stuff you don't care if it's hot, cold, or whatever, and it's not going anywhere, and it doesn't have a use-by date. But if it's coffee, or if it's wheat, or it's cocoa or orange juice, or all those sort of things, then there are factors impacting the crop production. And that's why I find agricultural commodities and base metals and energy a real fascination, because they drive the world. And that's what I pretty much studied in my own world, not an agricultural economics degree, but more in the point of a self-taught respect of the market skill.
I totally understand what you mean. I mean, everybody talks today about NVIDIA and chip making and artificial intelligence, but in the end, the bottom line is everybody still has to eat. And so food, I think, with the world population growing and growing and growing, and the weather playing more and more crazy, I think food will become very, very centric in the future's economy.
Yes, I do agree with your assumption. We're addicted to coal. Mm-hmm. We're addicted to coal-fired power plants, if you look at what's happening in far as China. So the whole essence of heat, cooling, energy, motor cars, natural gas. We want to wear a gold watch, or we want to buy gold as a store of value. We want to buy a diamond for a loved one. We want to buy a pearl, or we want to buy a cup of coffee. They're all commodities, as you've said, and that's as the world becomes more protein centric. So the dietary habits change of consumers from a bowl of rice in China, which was the standard 40 years ago, how it's changed so dramatically now to a protein-rich diet. Well, that requires energy naturally for an animal to feed on, and then the cost of that. So we all understand what a protein-rich diet does for you. And, the building of muscle, the building of mitochondria, the building of health and wellness. So, I think the dietary habits are changing so rapidly, and that is a sign of wealth, that this is all a war for protein in a lot of ways.
I understand. And I would like to go back to what you said before, that China has a huge hunger for Australian iron. And the relationship between Australia and China in the last couple of years get quite complicated, because China wants to increase its influence on the Australian economy, and Australia tries to push a little bit back and feels their interference into the local politics, or to the local interference becomes quite strong. Can you maybe a little bit elaborate on that and explain the tension and the relationship with Australia and China?
Well, it's a relationship that's been first off, you've got to applaud it because it's been such a dramatic impact to our domestic economy, and it's assisted China no end in the sense of a cheap or cheaper opportunity or product and for commodities. So they've had an insatiable appetite to buy these particular commodities, as we've highlighted. Naturally, China wants to buy at the cheapest price possible, not the most expensive. So that makes sense. And we want to sell at the highest price, not the cheapest price. That makes sense. Yeah. So then you've got the argy-bargy between two players that it's like having a dance and someone's leading, but the other side may not want to go that direction. You know, you want to dance the waltz and this one wants to dance rock and roll. So the issue, naturally, you've got as far as tension is, I think, a normal course of event with a country that's got 26 million people versus a country that's got 1.4 billion. You can't, I mean, until you actually go to Shanghai or Beijing or there you could probably look, there's probably the best part of 5 to 10 cities in China with over 20 million people each. I mean, and maybe one has 26 million. So that's the size of Australia in that one city. And so that really gives us all an appreciation, the size and the consumption of what China represents on a domestic scene internally in China and a global scene with 8.5 billion people or close to it now. Then China's running at 1.4. That's a huge component of the world population. So through its sheer size, I would say that it naturally wants to maintain supply. It wants to keep their relationship open, and it wants to push, like anything, you want to push that other party to maybe doing things the way you want to do it. And we all understand from a top-down philosophy the Chinese model. And if you haven't been to China, then this is to our guests and to our viewers, then they really should make China a vantage spot as far as visiting, because it truly is an amazing country in the world. And you need to see it, appreciate it, and respect it for what it is and what it represents from a geographical standpoint and from where it sits domestically in the sense of, just a quite incredible manufacturing centerpiece of the world, Vic Gill.
I understand. You think the relationship will get stronger in the future, or it will? We have also another power in Asia that became stronger and stronger, also population-wise, and especially also growing economically. It's India, right?
Yes.
India, it became even population-wise bigger, and the economy is growing faster there than in China.
Yes.
Is this something that Australia also will affect in the future?
Well, I think a couple of things. First off, I travel to India frequently. I've been there 3 times in the last year, and I do a lot of TV out of India with CNBC, Bloomberg, and NDTV Profit. So, and ET Now. ET Now is the largest viewership in the world. The second largest after Dow Jones as far as newspaper readership. So there's a lot of people naturally in India, and a lot of people read newspapers. So, and it's about a 3-hour, 20-minute flight from Dubai. So it's very convenient. So if I'm in Dubai and I use that as a hub, if I fly Emirates, then I've got CNBC Arabia in Dubai, I've got Bloomberg Ashak in Dubai, and I've got Sky News in Abu Dhabi, and then Al Jazeera is in Doha, in Qatar. So it's a easy hub to work from, in the sense Dubai. I don't spend too much time there, but it's a great hub. But Sydney's so isolated, and from a time zone perspective. So India is quite a fascinating country because you've got a very young population, Gil, versus a one-child policy and an old population, or an older population being China. So India is really ramped up on entrepreneurship, innovation. Naturally, some of the best professors in the world of business schools are India. They're great technocrats. They're wonderful strategists. They're wonderful marketers. They're highly educated, and they're very, very capable people. It's such an amazing country. I love India. I just think it's fantastic. And if you haven't been there, then really you should go, because Mumbai and New Delhi are just incredible. And everyone, from my heart, I truly believe everyone should see that in their life. They should see, if they can afford it and take the chance, the Great Wall of China, because it's an engineering feat. You can't understand its might. It's mind blowing. And everyone if you're a lover, and if you've got someone in your life, then really a demonstration of love would be the Taj Mahal in Agra, outside of New Delhi. I was over there in February. I was asked to go over and speak for ET Now, a global business summit, and it was opened by none other than Ray Dalio from Bridgewater Capital.
Oh, wow.
Yeah. Oh, yeah. The cast are big. So, when you've got that level of speaker, and, it's just, I'd be happy to park the cars anyway. They want to hear from it. And the Prime Minister was there, Mr. Modi, of the largest democratic population in the world, being India. So I was in New Delhi in February. So I had the good fortune of seeing it again. And it truly is spectacular, Gil, because, again, faces oceans, surrounded, just got some of Jim Rogers. This is what Jim Rogers says. If you want to visit any country, if you want to see every country in the world in one country, visit India. Valleys, rivers, mountains, being the Himalayas.
Yeah.
Ocean, the best seafood you'll ever eat. Wonderful jungles, fantastic for animals. So tigers and you name it, every state.
Elephants.
So it's elephants. I've seen elephants walk down the street and walk next to them. I've ridden on elephants. It's got incredible fabrics. It's got innovation and technology like no other, and it's got a young population that really is engaged, with highways crisscrossing the nation. Their infrastructure spend at the moment, from a rail perspective, being trains, they're building the size of Germany's train system every year in India. Wow. So that gives you an idea. I mean, you can catch trains nearly anywhere in India, and when you've got 1.3 billion people, you're going to get them moving. You've got to get them, how do I get around? And so they're building with some of the greatest technology. They're using now tunnels and getting people moving through cities like Mumbai, which is just quite incredible. Freeways.
This is amazing. What I see is really your influence from Jim Rogers, because he was traveling the whole world.
Yes.
After he finished the hedge fund. That's right. And I remember in his book, he writes, like, you enter a new country, you immediately know if you should invest in this country or not. That's right. Because if there is a black market, or if there is, yes, corruption, and you have to pay by some corruption things, you shouldn't invest there. And you can immediately feel when you travel where you should invest and where not. And I see that you are recommending to travel a lot, and I think that's really also his influence there.
Oh, definitely, Gil. Definitely.
Peter, I would go back now. So we talked about China, we talked a little bit about India. There is a third country with a very, very strong connection to Australia, and that's naturally the island just next to Australia, and this is New Zealand. Yes. I don't know if it's like, I grew up in Switzerland, and we had like always competition with Austria, because they're very similar. Sometimes they're better in ski, sometimes we are better in skiing. And there is this natural competition. Do you have this natural competition with New Zealand?
Absolutely. Yes, there are. Absolutely, Gil. As far as, I think it's probably more to the point of rugby. And you're looking at that, and the rugby, which is the New Zealand team, is called the All Blacks. Yes. And the Australian team is called the Wallabies. The All Blacks truly are I think the greatest team, and it's been for decades the greatest team in the world.
Yes.
in the sense of rugby. I'm not saying they're unbeatable, but they win far more than they lose. And it's like a religion for a small nation, again, surrounded by water, again, beautiful country to visit with incredible mountains. You know, when you're looking at some of the movies that have been made and what the countryside represents, it's just an amazing country. And again, you know, if you're coming there with a strong currency, New Zealand is a very affordable country to, you know, stay in, eat in, and travel around. Mm-hmm. And I'm sure that anyone would have a really wonderful time. You can ski there in winter. It's got magnificent clothes and merino wool, produce, great food, and they're an exciting country, to say the least. A very exciting country being New Zealand.
From a perspective of commodities, though, New Zealand is much more dairy focused, I would say, probably. Yes. I'm right. Then mostly it's about milk products, it's about food products, and it's less iron like Australia. So,
yes, very much so, Gil. I mean, they don't have deserts over there. We've got, you know, Sydney to Perth is 4,000 kilometres nearly of all desert, and what's underneath there is gas and oil and of course, you know, the likes of iron ore and so on, where New Zealand doesn't have that. And New Zealand also has a lot of sheep, and, you know, it's a big exporter of its sheep to the Middle East. Mm-hmm. So there's another part of the whole, you know, that, again, that, as you said, the dairy side, and of course from a meat and livestock exporter as well.
How would you be, because most of our viewers, they're traders, so they want to know, you know, how do I trade stuff? How would you call the trade Australian dollar, New Zealand dollar? What is important to watch out when you trade this currency pair?
Well, you've got to first off look at, you know, the underlying fundamentals, you know, what's happening from an interest rate perspective. So there's the first side. Are you raising rates or lowering rates? Mm-hmm. And that seems to, you know, like, because when I said this on TV yesterday, when and we spoke about the yen versus US dollar, and I said it's two parties are in the dance. So you've got not one dance. You haven't got one person in the dance. You've got two people in the dance, and we're both going to dance the same dance. As far as a currency pair, so I've got to know whether you're going to raise interest rates or lower them, and you need to know whether your unemployment numbers going up, inflation, what are those impacts doing? Because you've got those, they're just some of it. Then you're looking at from an employment standpoint. Then you're looking at from services and PMIs and what's happening from the domestic GDP of the country. Is it strong? Is it resurging? Is it growing? Or is it shrinking? And these are all factors that you've got to know, right? Well, that's what's happening. We've got some data going to drop in this month. And what's going to happen? Well, it's the 22nd of May. By the 31st of May, we've got some data. And if it's not good and their data is better, then there's a big chance that the currencies one's going to go up and one's going to go down. Mm-hmm. And so this is what I keep on getting back to. And I'd love to, you know, in time, I hope I've got a long career at XM, because I would like to put a library of books out, and the books would cover from a fundamental and technical standpoint, but there's also the seasonality aspect, and people lose that. So seasonality is what happens with weather outages, what happens with planting of food, what happens with, frosts, what happens with hurricanes and Mother Nature. And all of that, and then religious festivals, and where is Christmas, and what happens with school holidays. And so all these impacts greatly impact currencies and commodities. That's the seasonality. Christmas, religious festivals, as I said. So that's global. Then you look at the technical analysis. Well, I don't have to, I'm not here today to talk about technicals and our discussion, because it's a science in itself. And we've got some of the best teachers globally that give that information to our traders all day long, in any language you want, nearly. And then you're looking at, so there's that part of it. Then you look at the fundamentals. Well, the fundamentals are what's happening, as I mentioned, as far as unemployment, PMIs, what's happening with inflation, what's interest rate policy, where is the particular currency or commodity or stock index, what if you're trading stocks, what's the earnings season looking like, what's the strategy of the business looking like, what's the health of the company looking like, what's the CFO or the analyst call saying. When I watch CNBC, they've got the analysts there and they're asking the CFO, tell me, Gil, what's happening with this company? I mean, you're hitting great numbers and, you're doing share buybacks. Why are you doing that? And what's the storyline? So I went to good business schools so I could learn the talk, so I could appreciate the walk.
Mm-hmm.
And I didn't know when I did this 20 years ago, and I spent a lot of money on business schools, but I paid myself. It was an investment that I did, but I didn't know what it would lead to.
Yeah.
I didn't know. Had no idea. Well, I had a dream and I had a vision, but I didn't know that I'd be sitting here, 20 years later coming from Wharton going, it was now. I mean, I went there in June of 2004. So it's nearly 20 years ago in another month, in another couple of weeks. Pardon me. So that's what knowledge does for you, Gil. It gives you a framework to be able to hinge off and then to be able to say, okay, I can understand that.
Mm-hmm.
And that's what traders have to be able to, if you want a holistic view, you're just going to trade technicals and you're not worrying about what are the key drivers driving the technical change. I want to know what some of them are.
I absolutely agree.
And I want to know that there's a public holiday tomorrow and I'm not even aware of it. And you tell, that public holiday is a 3-day break and this impacts the market because there's more consumption from retail sales or from gasoline demand because people are driving. They call the summer, in May in the US, it's what they term summer driving season.
Mm-hmm.
So people drive because they've been in snowy conditions for 6 months. They're coming out of winter. And they're saying, I want to go from Nebraska down to Florida. You know what? I just want to drive the car. So you drive the car, you've got more increase as far as gasoline demand.
Mm-hmm. Mm-hmm.
So, and then I find that very fascinating. That's the consumption patterns that impact the commodity prices.
I think what you are explaining is also really what I totally resonate to it. In order to be a good trader, you have to have, I call it a pocketbook philosopher. You have to know many, you don't have to be an expert in detail about the weather, but you have to be hungry for knowledge and know many things. A generalist, maybe. Not an expert, but a generalist to understand the whole picture.
That's right. I think, when you're talking about, exactly, Gil, and when you're talking about like the likes of Mother Nature and you're saying, okay, well, what's happening in the US in July, August? My mind goes, well, that's hurricane season.
Mm-hmm.
And you go, yeah, but you live in Sydney. Oh, yeah, but the hurricanes impact because the sand temperature of the Sahara Desert, and you have a very hot summer, all of a sudden, the heat temperature from the desert impacts the water temperature, and the temperature rises in the Caribbean because it comes off the Atlantic to the coast of Africa.
Yeah.
And then that's not far, and it's very close geographically to the Caribbean. The air starts to whirl off the water, the temperatures rise from the sea temperature, and then that can create hurricanes, and you can get successive hurricanes through that whole Gulf region, and that impacts oil. And then what does that do as far as rigs that are downtime? So you lost all your rigs or you had to shut them down. And what does that do to oil price? And then you've got geopolitics can come into the picture as well, as far as what we saw with the Iranian president the other day, and all of these sort of things. So it's I agree with you, Gil. You don't have to be an expert, but it's if you find it fascinating, and I find it fascinating.
Yeah, me too.
I had one of the guys that, and I won't say who it is. It's not important, but he was one of the best I ever came up against as far as an anchor, and he was in Asia. And I'll put this here. He worked for Bloomberg, and then he went to CNBC, and he was incredible. He was just an incredible guy, and I miss him dearly. And he's no longer in the game. And he said to me one day, he said, "You are encyclopedic of knowledge when it comes to commodities, and I've got a memory that allows me to remember facts and figures because I'm interested in it. I'm fascinated in it.
Yeah.
So I've got instant recall because I'm interested in it. If you're not interested, then you either try and become interested or don't worry about it, if you know what I mean."
I absolutely understand. Now, look, we are at the end of our hour. It's unbelievable. I think we could talk easily another hour.
No, I can't. I got CNBC.
You have CNBC. So we have to leave it there. And Peter, it was an absolutely delightment to talk to you. And I hope this is not the last time. Thank you so much for your knowledge, for your insight. And we have questions here that they're asking more about oil prices. So maybe this is for the future. But really, this was amazing. Thank you so much. And see you soon again.
Well, thank you for the invitation, Gil. It's lovely to be here, and take care to all our XM clients around the world. Thank you.